This morning, we said the greatest risk to Bitcoin, and we talked about what was currently happening in the financial markets. Here's just a tiny clip of that.
Simple is the current state of affairs. The Fed already lifted the buyback ban, but has still not provided any clarity on SLR relief. And if SLR relief does not happen, buybacks mean that banks will trim their balance sheets on both sides, shedding deposits, reserves, and also treasuries. This is risk for us. We have to watch what's happening. Why the base case is that the Fed is going to do whatever it needs to do to intervene and keep the music playing. We have to watch out what happens. That's why I bring it to your attention today. Uber importance.
Of Uber importance. And what did Powell do? Powell did. Out of all the options we went over, he did the one that we did not, or I thought was least likely. He did nothing. He didn't hint at all about Operation Twist. He refused to speculate on the repo markets. No pushback against any recent bond volume. No mention of the SLR exemption or extension. He didn't say anything. The closest he came to saying anything actually chose the least likely of all scenarios. There was no hints at Operation Twist. He refused to speculate on the repo issue. There was no pushback against recent bond volume and no mention of the SLR extension. This was the closest he came to saying anything of note. We will monitor a broad range of financial conditions, this is Powell speaking, and think we are a long way from our goals. I would be concerned by disorderly conditions. Well, us too. That's why we're here in this moment talking about this. In markets or persistent tightening in the financial conditions that threaten the achievement of goals. What's their goals? It seems to be to run it hot, to run it really hot. Did they have to pull back a little? Powell, by not saying anything, is saying right now, I think that the markets are actually functioning fine and we're going to continue to let them while we monitor certain conditions. So this was not what the market wanted to hear. You can see the initial reaction of the 10-year up, 5-year near-term interest rates also up. Look at gold selling off further, right? As interest rates go up, this is inverted yield on 10-year of gold. And the dollar's initial reaction has been bid. The dollar's spiking right now, right? What is Jerome going to do next? This is not what the market wanted to hear. Let's take a look at what's going on and what could be in store from here. We're going to start on the S&P 500, all right? And what I did over here to give myself some type of bearing of what we're looking at over here, I took the lines that we were currently tracking. The last we were focusing on here was as price came into this resistance over there. We had that resistance already up in place and then been in no man's land. Now breaking down, retesting that broken support, now holding as resistance, resuming off. Where's the next support? How much further downside might we be looking at? The first thing I did was added a clone line. You can see how nicely it lines up at that portion of the market over here. But I'm bringing it down over here, and I'm connecting the lowest price point I see over here. I see that connects also with this lowest price spike down over here. So I would not expect price to spike down any further than this. And if it did, I think that we are going much further. If you take a look here on the daily chart, you could see, well, we still have quite a ways to go, right? Let me put on the 8-hour. It's a lot cleaner. I'm going to remove this little line of the support that we're coming into. And if that we trade below it, it looks like we're going to bleed out further. That could be towards the 36.23 support, or even the 35.46 support. That could be a 10% correction, something that we started looking for actually as a possible, like, watch out. I don't know if it's happening, but if it happens, this is what's going to look like. Why the S&P over here on February the 17th was trading at 39.19. I put out a video. This video was very important, and it said how a stock market correction could affect the music. How a stock market correction could affect Bitcoin's price during a bull market phase. This was posted on the 17th of February, and I talked about what was happening in the markets. I talked about what was happening with the rise in rates, and then I gave out, in that video, I gave out levels about what type of correction we might look at, saying I don't know if we're going to actually correct back that far from here or not, but at the same time, I think that ultimately we're going higher. Those were the two messages I put at that point. So now just, fast forward over here a couple of weeks and it's all unfolding, and it's unfolding for the reason I gave in this video. You should watch this video today as we talked about this morning's live stream, the greatest threat to Bitcoin. right? Beautiful, important video. But that video was set up by this video over here, how a stock market correction could affect Bitcoin's price, bull market phase. That really talks about just a continuation of what's occurring with the SLRs, with Powell basically just standing aside and was like, we're going to let markets be markets right now. And the market not liking that because it wants more, right? What's going on with price and what could we be looking at? I mean, it's something that we had been monitoring already, right? And, at this point, we're about halfway there or a little less. This could be a 10% correction, and it's not guaranteed that the market only corrects 10%. I think it's healthy. What Powell did today, I think, was really healthy, because it's not healthy to keep manipulating the markets. So even though the whole reason the markets are operating as they are is because they're engineered by the central planners, and it's not working, things were running hot. They're going to be running a lot hotter. Fast forward 3 to 6 months from now, as people return to work, we're really going to start seeing, we could call it rampant inflation. It's hard to say rampant inflation and not think that what we already experience is ramping. But maybe according to the CPI, that will show inflation, and therefore, either which way, you could see over here as we come into this area of support right now in the S&P 500, this very well might be, throughout this New York session here, where we put in a low. It's quite possible. If we break down over here, it looks like that we will come down probably harder and continue. It could happen over the next couple of days, and we might see a move lower down towards the 3660 area and or even potentially lower. We'll continue tracking it. What about Bitcoin and how's it holding up right now throughout all this market drama? Bitcoin looks pretty tight. It looks pretty good so far, holding this area of support middle. Now, Bitcoin does have the potential here to still correct further down towards 45,600 and still be bullish. It would not be bullish to break this trend line over here. That would be setting up a breakdown outside of this, upward sloping channel, bear flag. And if it breaks down over here beyond this trend line, then you could see a test not only of that recent low over there, but we could be making lower lows, potentially even testing somewhere around the 37,500 area. That would be, for Bitcoin, about a 35% pullback, a pretty big size pullback during its bull market phase, but well within the norm. Be prepared, because if this is unfolding, it's going to be unfolding within the next couple of sessions, continuing overnight. Well, so we'll watch it. And that goes for the equity markets. Over here, you can see if we lose the support, then there's much further quick downside. What about on the Nasdaq? Let's just take a look across the markets. Now, again, Nasdaq over here also holding a support level. Support level coming in at 12,443 in that area. And yeah, if it holds over here, it has the potential, but if it breaks this area, the Nasdaq is also testing lower, at least down towards the 12,100 area. Could be lower, but that would be the next leg down. So the dollar, though, is also coming to a pretty important place over here. The dollar's coming in to the trend line. This trend line is very important. If you didn't see the video that we put out over here, this was towards the first of the year. It was the first video we put out in the new year. Let me see if I could go back and find it. It's very, very, very important, talking about the current situation of the dollar, what we were looking at going into 2021. All these videos were really good. All these videos were really good, and it's a lot of content. And you're like, well, how do I catch up on everything? It's not possible. You just have to start wherever you are right now. Wherever you are right now, you're continuing to just take in more information and be able to understand things in a different manner. Here it is. King dollar, critical level, because it's a dollar story. It's not often. Do you hear my New Yorker? It's not often that I'm putting out content that's macro related. It's mostly focused right now on Bitcoin, and because right now that's the most important trade there is to focus in on. But I'm hyper aware of what's going around across the markets, and I'm not just getting caught up in the daily whiplash and news feed. When important things are happening in the market, like today, like this morning, before this afternoon has been unraveling over here, I was letting you know, listen, there's risk in the market here. Is this something that I want to go ahead and, get all Bitcoin off exchanges into hardware wallets? Whoa, wait a second, what? Wouldn't you want to send your Bitcoin to the exchange maybe to sell? Really? You selling any Bitcoin you have in a hardware wallet? Right? Think about it. We were talking this morning about Bitcoin being, this was brought up by Greg, Bitcoin being anti-fragile. It's the financial system that's fragile. It's why this engineered financial system by the central planners, is breaking all the time. Not, is because of poor engineering. It's actually brilliant design. It's actually brilliant design on their part. If you haven't seen The Money Masters, you have to watch the documentary on YouTube. That is like Conquering the Markets 101. Before I get off, one more time, I'm really proud of the work that we've been putting out and doing. It's absolutely extraordinary. There is so much content over here. Every day we do what we do, and it just keeps getting better and better. So let's see. Let's see if this is if we're going to get volatile over the next couple of sessions. The DXY coming into that resistance over here that video points out, showing the channel that we're currently in, how this is very, very bearish. We were expecting at that time that video was put out, price is trading right over here, somewhere towards this bottom. And I said it would be, our base case basically is, or we would not be surprised, even if price came down a little further towards 88.40, but that we retest this resistance. That already happened. And then it seemed to hold, but here we are back up again. So it looks like potentially as we test again on a lot of strength, is the DXY going to break above this resistance, right? Or are we going to start seeing a stronger dollar over here? Because a technical break over there, that's a big event for us. The last big technical breakdown we had was over here. This is where we became bearish on the dollar. Right? We didn't think it through intellectually about why the dollar should be bullish and then tried to fit our analysis around that. We're looking at price levels that are occurring on the chart. It's not subjective, in my opinion. That's an oxymoron, don't you think? It's not subjective, in my opinion. Anyway, breakdown, retest, resumption, boom. Again, nice bear flag, strong resumption off. Ending in a little bit of capitulation. And what's happening right now is that we are moving sideways over here, consolidating. We were been in no man's land, called out we've been aware we've been in no man's land and called it out for about 2 months now, very early, right? But now we're getting to a point where we might break out to the upside. Just as we were trading down over here just last week, we had the potential of breaking down. We didn't break down, right? Losing that area of support, that swing low, 89.43, coming out of that little bit of consolidation. That would have been very bearish for the dollar. A lot of people might be thinking the $1.9 trillion stimulus would be enough to cause further dollar weakness. We'll see. Markets are forward looking. We'll see what the markets might be thinking. The U.S. is actually going to be in a period where yields are going to be rising, inflation's growing, and whether or not it wants to be acknowledged by the central planners, right? It's still happening either way. So is the market going to go ahead and push the Fed to eventually raise rates? It'll be a while before the Fed would do that. Inflation would have to be out of control, and they're not even acknowledging we're having inflation. So is it possible to theorize a reason that the dollar should be bid over here? That doesn't matter. Breaking out above this trend line over here and breaking above this resistance over there at 92.23, that opens up the upside. That would make the dollar, back neutral in this upward sloping channel that it's been in for quite a while. This is going back to 2008. Going back to 2000. So are we breaking down here further? Are we going to see that continued weakness of the dollar? Or is the U.S. kind of getting ready to firm up a little bit? Is the U.S. actually, when I say U.S., I mean the New York Federal Reserve. Is the New York Federal Reserve getting ready here to let the current market play out as it's playing out and looking for something to get really hot and for them to step in? And how is a correction in the equity markets a healthy thing? I think so. I think it's really healthy. I don't think that it's all nonsense. It all comes back to Bitcoin. Bitcoin here, losing the support, that little midline support we had over here. Potential leg down now, continuing. You can see a couple things playing out. This is the 30-minute chart, by the way. This is, if you're watching closely over here, but we're targeting now this channel over here, this trend line support coming in somewhere around $45,200 right now. Unless, of course, we're able to start making a higher high over here, trading back above that trend line anytime soon, then we would be probably looking at this line of resistance above as a line to focus in on and waiting to see what would happen and to move into that resistance. It would require a breakout of this trend line over here, no matter when it happens regardless, in order for this current pressure to be relieved and for the next move up to beginning on Bitcoin. It's a question of when, in my opinion, do your own research, not financial advice, of when Bitcoin continues to move up from here, from where it's at, monitoring the current pullback, understanding where my next line of attack is. If you're a predator, watching what's going on over here, waiting for that like momentum to be breaking your way, not trying to pick the bottom, right? Not trying to pick the bottom as something, and a large momentum in force is currently going against you. No need to pick the bottom, wait for it to correct, repair itself, and break out. Not the time to be buying, not the time. If you're leveraged, lightly leveraged, are you lightening up over here out of precaution, waiting to add again as the momentum continues on your side? Even though this might be, we might find that little bit of support right over here that could peak out sometime, I guess within the next 30 minutes, into the next hour, and be trading back above, watching this trend line resistance. But right now, Bitcoin continues to be looking under pressure, looking much lower as the next line of stance, right around 45,200. In that area, if we break from there, we're watching lower. We're looking down at 43,000, and then a break below there. That's when things could really get a little, let's say, unruly. On a perhaps a 35% pullback on Bitcoin. Just be prepared for it. If we test lower, if we break this trend line over here, at that point, we'll be back, tracking over here on the 8-hour. We'll be looking at what would be the next sign that we're resuming out over here. Are we going to have to start putting a trend line, including the all-time high and then the highs from March 3rd, extend that down over there? And will that be the time when we're really breaking out for the next leg up? It depends on what happens really in the next, session or two. We'll be tracking it together. When I say session, I mean 8 hours. I'm watching and follow Bitcoin on the 8-hour time frame. So, a session is 8 hours. There's 3 sessions a day, 24 hours in the day. And that's what I'm watching. That's what I'm watching on Bitcoin. And as I'm watching my downside right now, as we take out that trend line, understanding what's in play, I also understand that it's a break of this trend line over here to the upside that really sets off the next leg price discovery on Bitcoin